London, Reuters. World stocks were set for their longest losing streak in more than 6 months on Wednesday as weaker commodities weighed, while the euro hit its highest levels in 3 weeks. People walked past an electronic stock quotation board outside a brokerage in Tokyo, Japan, September 22, 2017. Reuters. Toru Hanai. The MSCI World Equity Index, which tracks shares in 47 countries, fell 0.2% and was set for its 5th straight day of declines, its longest run in the red since March. A slide in crude oil prices on worries over the outlook for demand and weaker metals prices weighed on mining and energy stocks across Asia and Europe, which took their cues from the previous day's stock declines in the United States. The Pan-European STOXX 600 index fell 1% and at its lowest level since September 13. The index is still up nearly 6% so far this year. The UK's top share index, the FTSE 100, declined 0.5%, while Germany's export-oriented DAX fell 1%, weighed down by a stronger euro, which had risen nearly 0.5% in European trading hours. MSCI's broadest index of Asia-Pacific shares outside Japan had earlier fallen 0.6%. China's Shanghai index was down 0.55%, Australian stocks dropped 0.6% and South Korea's Kospi shed 0.4%. Japan's Nikkei lost 1.5%. It was nearly a week ago when we had that sharp and unexpected sell-off in the Nikkei, and given that we've lost over 1% in Japan yet again overnight, it appears this negative move has yet again spread to this part of the world, said David Madden, analyst at CMC Markets in London. I think it's a combination of people just viewing it, last week's sell-off, as a wake-up call that even though the political and economic outlook haven't changed a whole lot, equity markets just don't go up forever. Lifted by steady economic growth, supportive monetary policies and solid corporate earnings, global equities have rallied hard, with those in the United States, Germany and South Korea scaling record heights recently, while Japan's Nikkei climbed to a 26-year peak. Euro shines. Analysts also said the rising euro, which on Tuesday got a boost from strong German economic growth data, also put some pressure on Eurozone stocks. The single currency hit its highest against the dollar since October 20 on Wednesday. With the Eurozone's annual economic growth rate outstripping that of the United States in the third quarter, led by Germany, markets are increasingly optimistic about the regional outlook. Pressured by the euro's surge, the dollar index against a basket of 6 major currencies lost about 0.3% to 93.578. The greenback was over 0.5% lower at 112.755 yen, after pulling back from a high of 113.910 the previous day. U.S. inflation data is due later in the day. Crude oil prices stretched losses, weighed by forecasts for rising U.S. crude output and a gloomier outlook for global demand growth in a report from the International Energy Agency, IEA. OR.